This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This chapter is going to go through and look at one of the disclosure standards within the syllabus, and it's IFRS 8 and its operating segments. To give you a brief overview of what IFRS 8 essentially does, is it looks at a group set of financial statements, so taking your group statement of profit or loss and your group statement of financial position. What it does essentially is it deconsolidates everything, because we've consolidated all the assets, all the liabilities, all the income and all the expense. And by doing that, although we're applying the concept of substance over legal form, what it does mean for the user of the accounts is that they tend to lose a little bit of information that they could use to help them make judgments about how well the overall group is going to perform into the future. Because when we look at the group set of financial statements, we can't identify which subsidiaries are performing well, which subsidiaries aren't performing so well, and we can't identify the asset base that a subsidiary has and which it is using to try and generate the profits that it is within the business. So all IFRS 8 does is try to deconsolidate the consolidated financial statements to help the users gain a better understanding of how the business has performed and which elements of the business have performed better than others. And then what they can also try to do is they can try to use that information to try and predict how well the business is going to do into the future. So instead of looking backwards like we do when we're there as a financial accountant, we're going to try and help the user of the accounts have a little bit of an idea of how well the entity is going to do into the future as well. Okay. So let's just go through and have a look at the detail behind the standard. So what you've got there is, well, first of all, going to look and define what an operating segment actually is. And then we're also going to go a little bit deeper into why the disclosure is required. So first of all, what is an operating segment? Well, by definition, an operating segment is a part of the business whereby the results are reviewed regularly by the chief operating decision maker. Now, the standard has to be very careful because it is an international accounting standard, and it can't turn around and say, well, look, we're going to look at the results that are reviewed by the CEO, the chief executive officer, the person at the very top, because around the world, the CEO might have different roles, maybe referred to differently other than the CEO. So what they've done there is they've referred to it as the chief operating decision maker, who makes the ultimate decisions, who essentially is in control of the overall business. And if that person who is in control of the overall business regularly reviews the results of an entity within the group, then that is an operating segment. And therefore, there is potential for that operating segment to be disclosed separately. Now, we're not saying every operating segment has to be disclosed separately. If you look at some of these really large, complex groups that are in existence, they have hundreds and hundreds and hundreds of subsidiaries. And you have to think, well, if I was to then disclose the separate results of all these hundreds and hundreds of subsidiaries, would that actually help the user of the accounts? Imagine how thick the annual report would be and the notes of the accounts at the back. Whoa, that would be huge, wouldn't it? Okay. So we're going to start thinking later on about grouping some of these operating segments together and whether or not that it is appropriate to group those operating segments together. But for now, an operating segment has its results reviewed by the chief operating decision maker. Again, when we come to looking at the disclosure later, we need to identify who the chief operating decision maker actually is. But one of the reasons the standard was created as such is that if you take the chief operating decision maker and look at how they review the group, then you're all of a sudden, as a user of the accounts, getting an internal view of how your group actually works. Because the chief operating decision maker is internal to the business. They are reviewing those internal results. So you get an internal perspective of how things actually operate, which again helps you make better judgments and better decisions. If we think about why disclosure is required, I think we touched upon this right at the very start. First of all, it helps you understand the past performance a little bit better, doesn't it? Because you'll be able to identify loss-making segments. You'll be able to identify the more profitable segments. And you'll be able to potentially to calculate ratios such as return on capital employed, because you can start to look at the capital employed, the assets and the liabilities, the operating segment is using to generate those profits. So you can get a better understanding of how particular aspects of the group have performed into the past. Okay. Likewise as well, it helps you understand the risks and rewards of each particular segment. Different parts of the business might operate in different parts of industry. Different parts of the business might operate in different parts of the world. So hopefully there we'll be able to go through and get a better understanding of the risks that we are exposed to, and therefore we can balance up the risks that we are exposed to with the raw rewards that we would expect from the risks that we are faced with. If you're not happy with the risks and not happy with the rewards, then you can do something about it in terms of maybe disposing of your investment and investing elsewhere, can't we? And then finally, what you've got there is it helps you make better informed judgments, doesn't it? You get that internal view of the entity. You are able to understand what's happened in the past better, which can help you think about what's going to happen into the future potentially with regards to particular operating segments. And because you know the level of risk and the reward, you can then help yourself to make better judgments with regards to your investment within the overall group, can't we? Okay, so it's important to understand what an operating segment is and also why the disclosure is required. It helps the user make better judgments going forward into the future, doesn't it? It gives you that internal view of how the business is operating. Following on from that, we now need to go through and look at what segments must be disclosed. So you have a group, you have hundreds of operating segments within that group. Which of those segments are largest enough to be disclosed? If they're large enough, they are important enough. If they're small enough, they're not so important and don't necessarily have to be disclosed. So this is determining, if you like, the number of segments that we must go through and disclose. If it doesn't meet the tests here, then you can still disclose that segment voluntarily. But clearly you need to just be a little bit savvy about disclosing too much, if you like, information within your operating segment notes. So what must be disclosed? What are the tests that we have to go and apply to each individual segment to determine whether or not it is big enough? And there's essentially two percentages that you need to be aware of. There's a 10% threshold and then a 75% threshold. So the first 10% threshold that we look at is linked to revenue. So we look at our segments, and if each of those segments has its segment revenue greater than 10% of the total group revenue, so that's the internal and the external group revenue, then it must be disclosed. Okay. If it's less than 10%, it doesn't have to be disclosed. However, there is then a further 10% test, and that 10% test applies to its profits. So you look at the segment's profits. If the segment's profits are greater than the group's profits, but 10% of those group profits, then it's a significant standard and must be disclosed. If it's not greater than 10% of the group profits, then it's not disclosed unless we then look at the asset 10% test. If you look at the segment's assets, if those segments' assets are greater than 10% of the group assets, so the total group assets, then it is deemed large enough and must be disclosed. So having gone through each of those tests with regards to 10%, you now know the operating segments that must be disclosed. Okay, so you will have narrowed it down from 100 or so, maybe down to say 4, 5 or 6. Okay, they must be disclosed. However, there is an override rule in that you need to look at the segments that must be disclosed, and you need to look at the total revenue from those segments that is being reported. And if that revenue that is being reported separately isn't greater than 75% of the group's external revenue, so you need to actually disclose 3/4 of the group's external revenue by segment, and if you haven't, then you need to disclose additional segments. It's just ensuring that we disclose enough of our external revenue within the disclosure note to be useful to the users of the accounts. Okay, because external revenue is whereby we don't have so much control over that revenue, do we? Internal revenue we do, because we control the subsidiary and we can therefore control the revenue and the sales that take place between them. Okay, there's just an override rule that we need to disclose 75% of our external revenues by segments. Okay. Exam perspective for P2, you're not likely to have to draw up the actual disclosure notes. It's just going to be too long and too cumbersome. However, what you may have to go through and do is you may have to talk your way through the actual rules and just apply it very briefly to one part of the notes. Okay, so to talk through what must actually be disclosed and to discuss whether or not what the disclosure that is expected to be made is actually going to be correct and is in line with what you have there as per the rules in the standard. Okay. Just be aware, if you are applying IFRS 8, it only applies to listed companies only. So if you are not listed, then you do not have to apply the rules of IFRS 8. Moving onwards, we need to go through there and think about the combination of segments, because obviously you've got these hundreds of segments. We've narrowed it down to the segments that must be disclosed, but the remaining segments that are not disclosed, or some of those segments that have to be disclosed, could you go through and combine them together? Well, you can combine the segments provided that they have, as it say there, similar economic characteristics. So provided that they operate in a similar function, then you can combine them, and therefore you're giving away, if you like, less information to your competitors, aren't we? But there are specific rules about what we mean with regard to similar economic characteristics. So first of all, the nature of the product or the service has to be very, very, very similar. Okay, so the goods that you sell, the service that you provide, the pricing structure and how you set the prices has to be very, very, very similar. Okay. The nature of how you produce the goods, so not just what the actual product is, but how it is produced, has to be very, very similar as well. Your class of customer, so are we going to go through there and have the same type of customer that is using that product or is using that service? The way in which we distribute the goods, again, it is that similar. And the regulatory environment, how is the actual products or the services actually governed overall from, say, the governments or other regulatory services? Okay, if any of those characteristics are similar, then we will be able to go through and combine the segments. And this then brings us in to a past exam question there under P2, doesn't it? Okay. So what you've got there, very similar to what we've seen previously in a P2 exam. It goes through there and says, advise Gulf as to whether the proposed combination of the two operating segments is appropriate. Okay, so I think here, if memory serves me right, what Gulf was trying to do is that it had several disclosures that it needed to make, but it wanted to go through there and try and combine some of the segments so that it was disclosing less and giving less information to its competitors. So what we've got there, it says Gulf is preparing its operating segment disclosure note for the first time following its listing on the local stock exchange during the year. So as it's now listed, it now has to follow the rules of IFRS 8. Its chief operating decision maker regularly reviews the results of its three separate divisions. So you can see there you've got domestic and international railway operations and railway construction. Okay, so the CODM reviews those results separately, so they are operating segments. Okay. However, what it then goes on to say is it says Gulf is intending to report two operating segments in its disclosure note as opposed to the three reviewed by the CODM. And the key bit highlighted there is that the domestic and international operations are to be combined because it is felt that they have similar economic characteristics due to the services that they offer. Okay. The question is, are they similar economically? Do they meet what we spoke about on the previous slide? Well, what we need to go through and do there is we need to, in the next paragraphs, identify domestic and identify your international operations. So here we need to start looking at the specific detail. Let's look at the international operations first, because That's a shorter paragraph. And normally in exam questions, if things are shorter, they're then a bit easier to go through and deal with. So the international operations ticket prices are set by ourselves, and we collect the fare from the passengers directly. So international operations are very much dictated by ourselves. Very similar, if you like, to maybe Eurostar that you have there within the UK. The Eurostar set their own prices and they collect the fares from the passengers directly. Okay, you don't pay, if you like, anybody else who collects the money on your behalf. Okay. So that's how the international operations work. For the domestic operations to be combined, then I'd have thought that the prices would need to be set by Gulf. And I would also thought as well that Gulf will need to collect the fares from the passengers directly. Okay, if that's the case, then the products, the services are the same. The way in which they are operated is the same, and therefore we could combine them, couldn't we? But let's just go through and have a look about the domestic operations. A bit longer as a paragraph, it's maybe a bit more complex. But having done the easier, shorter paragraph first, it might make the longer paragraph easier to understand. So it says that the domestic operations involve a competitive tender process to run the railway service, which is then awarded by the local transport authority. So that didn't go through and happen, did it, with the international operation? So the way in which it operates all of a sudden is different, isn't it? The transport authority then sets the ticket prices. That didn't happen under the international operations, did it? It also collects the fares, so the local transport authority collects the fares. Under the international operations, we, as the entity, collected the fares, and when those domestic fares are collected by the local transport authority, that's then distributed amongst the operators running the contract. Doesn't look to me as if they are economically similar, does it? Not in the slightest. So therefore, even though they want to disclose two segments and combine two of them together, no, those three segments need to be disclosed separately. Okay, so domestic railway operations would be a segment, international railway operations would be a segment, and railway construction would be a segment. As you see there, there's no numbers, are there? Not one number whatsoever, apart from it saying example 1 at the top. But therefore, yeah, that's much more geared towards a question 2 or a question 3. And that's where you tend not to have as much computation that is happening. Okay, so that's much more aligned to a narrative written answer, isn't it? Okay, everybody happy with that bit there, being able to talk and discuss your way through a non-computational question. Detailed answer is provided in the notes at the back, and it is how you'll be expected to write it out in the real exam. Okay, so let's move on. What we're going to go through and look at next is what is specifically disclosed. We've spoken about the segments and what segments must be disclosed with regard to the 10% and the 75% test. So we now need to prepare the disclosure. I say that theoretically because we're only going to do that in the real world. We're not going to prepare it in exam world. Just too cumbersome and too time consuming. So what has to be disclosed? Okay, we have to disclose the revenue by segment. We have to also go through and disclose the results by segment. So by that, we're referring to your profitability. We're also talking about the assets and the liabilities need to be disclosed separately. Any capital expenditure that has been incurred on the segment needs to be disclosed so that we can see where the largest amount of investment is being made in which particular segment to help us give us an indicator of what's going to happen in the future. The more expenditure, maybe the more improvement, and therefore the more profitability likely in the future. Who knows? Also, depreciation and amortization will need to be disclosed, and any other non-cash expenses will need to be disclosed by segments. Okay, there's a lot that needs to be disclosed. So if you were to look at a particular operating segment disclosure note, you would find that it would take up a good 4 to 5 pages. Okay, if you want, by all means, choose a set of financial statements that you wish to analyze and you wish to look at and have a look at their operating segment note. However, what I'm going to go through and do is I'm going to choose one called Associated British Foods, or AB Foods PLC. It's a listed company in the UK. You can access their financial statements if you just wish by putting in an internet search for AB Foods. If you were to guess, what would AB Foods be operating in? Yeah, well done. Food, spot on. So some of the food lines that they see, and some of them may be familiar, are Twinings tea. Okay, so if ever you've drank tea, I'm sure you have, then Twinings is a famous UK brand. Ovaltine, so some drink that my parents used to give me before I went to bed. I think it's a malt or a wheat based drink. Okay, and then silver spoon sugar. Okay, so there's a lot of foods that you would be familiar with, that again that maybe you have tried in the past. Okay, however, there is also another brand that operates under AB Foods that you will have heard about, that you may be familiar with, but you would not have associated with AB Foods. Are you ready for the grand unveiling? Primark or Primark, depending upon where you're from. Okay. Yeah, Primark, the low cost clothes retailer based in the UK and Ireland and spreading around Europe and around the world, yeah, is part of AB Foods. And if you were to look at the AB Foods group financial statement, you would see that AB Foods is continuing to do well year after year. Revenues increase, profits increase, but you wouldn't know why. And you could investigate why through the operating segment disclosure note. You would be able to see Primark as a separate operating segment that is disclosed, and you will see that it makes up massive amounts of the revenue, massive amounts of the profit, and is why AB Foods is doing so well. It was a great idea to invest and gain control of Primark. Okay, so let's go through and have a look at it and see, can we spot the revenue, the results, the assets, the liabilities, the capex, depreciation, amortization, and other non-cash expenses. So if we go through there and have a look at the grouped financial statements of AB Foods from 2015 and 2014. So what you can see there is at the top you have the revenue. Okay, so I think you can see that the revenue for 2015 is £12,800 million. So £12.8 billion worth of revenue, isn't it? That they are making. Okay, the revenue has gone down ever so slightly, but we'll be able to investigate that, wouldn't we, if we like, through the operating segment disclosure. We also have some significant items included within profits. So you've got the profits less losses on disposal of non-current assets. What segments does that relate to? You've got the amortization. You've got some exceptional items. What do they specifically relate to? We don't know. Well, if we look at the operating segment disclosure note, they are non-cash items essentially and could potentially be disclosed. And then what you've also got as well as the profit for the period is that they're at 524. So we're looking at the revenue of 12,800. We're looking at the profit of 524 and seeing what is then disclosed separately of it. So if we go into the actual disclosure notes in more detail, you can see there across the top, you can see on that far, as you look at it right hand side, you have 12,800, don't we? As the revenue from your continuing business, and you can see that that is separated out into the separate operating segment. So grocery, sugar, agriculture, ingredients, retail. Retail is Primark, and if you look at that, it makes up 5,347 out of the 12,800. So it's somewhere between 40 and 45% of the revenue are attributable to Primark. The rest of it comes from the other aspects, the grocery. So that's thinking about Twinings and is it your Ovaltine? The sugar, very significant as well. And then agriculture and ingredients. You would need to go through and investigate what the agriculture and ingredient segments are. I presume the ingredients are what goes into your tea. And agriculture, maybe there's a separate part of the business that harvests the ingredients and sells them off to other areas throughout the world. Okay, and you can see that it's separated out, can't you? You could also go through as well, if you like, and apply the 10% test. I think all of those segments, apart from is it the agriculture, meet the 10% test. 10% of 12,800 is 1,280, isn't it? And agriculture is ever so slightly below that figure there. Okay. Other things that you've got there are the profit figures. So again, the profit for the group was 524. I think you can see that just above my shoulder, can't you? And again, we go through there. and separate that out. And that's where you can begin to see, well, if the total was 524, 10% of 524 is 52.4. And I think you can see now that the agriculture segment is big enough by profit, isn't it? Okay. Other things you can see, you've got the segment assets, you've got the segment liabilities. You've also got as well, isn't it, some significant non-cash expenses. So is it there the amortization and then the profits and the losses on disposal and closure of the businesses? They have been allocated out. So a lot of the amortization is on grocery and sugar. So maybe the brands have suffered, if you like, some form of impairment or extra amortization. And the profits and losses are essentially, can I see it there? It's on the sugar. So something within the sugar business has been disposed of, and there's been a closure of part of the sugar business. And again, you can then investigate that a little bit further as the user of the accounts. Other non-cash item that you've got there, just thinking about group accounts, I suppose, is the share of profit after tax from joint ventures and associates. So you can see there that grocery, agriculture, and ingredients all have, if you like, an element of an associate or a joint venture. Okay, excellent. There we go. If we then move on, there are additional disclosures that are provided within the overall set of accounts. You've got the non-current asset addition, so is that the capital expenditure? You've got the depreciation, the amortization, then there's some impairments as well. So again, you can see those expenses and where they relate to the particular part of the group. Okay, again, that's going to help you make better informed decisions and help you understand the past performance that little bit better. Okay, is it the I think it was, if I go back, it's that second column, the sugar, isn't it? You know, there's been a lot that's gone through and happened with regards to the sugar this year, which hopefully will not recur next year. So the sugar operating segment should perform better next year. Okay. Is there anything else disclosed? Wow. Yeah, there is. We need to disclose how the segments have been identified. So who's the chief operating decision maker, the products and services that the group provides. You know, I was unsure about the agriculture and the ingredients. What did that relate to? We will be able to find out in a moment. Is there any reliance on major customers? So they may disclose that my wife likes to shop at Primark quite considerably. But I suppose she's not a major customer to Primark. She's just a customer. But there we go. And also everything there was done by business, wasn't it? Can we disclose things geographically? And if we do, that's just the revenue and the non-current assets. However, you are allowed, if you want, to put in full geographical disclosure if you believe it is useful for the users of the accounts. So here, operating segment notes, it's note number 1. It's right at the start, your operating segment of all your large notes that you have to the accounts. So it says the board is the chief operating decision maker, so they have ultimate control and they pass the decisions. So we look at how they review the business. It says the management and internal reporting structure which combine businesses with common characteristics. So again, that's talking about whereby they combine potential operating segments. They have to have common economic characteristics, isn't it? And then what we've got is it details the specific segments, doesn't it? With regards to the grocery, sugar, agriculture, ingredients. So we can look at those now. Agriculture manufactures animal feeds and provides other products and services to the agriculture sector, whereby the ingredients, it's the manufacture of yeast, enzymes, lipids, yeast extracts, and cereal specialities. Sounds quite funky, doesn't it? But that seems to be the ingredients, if you like, the raw materials in terms of the grain, the wheat, the barley that they provide that goes into making all your cereals, maybe, I don't know, to Kellogg's or whoever else it may be. Okay. And then the retail, buying and merchandising, value clothing, okay, through the Primark and Pennies. I think Pennies is located in Ireland, retail chain. So the majority of it is Primark, but it's also Pennies as well. Okay, so that just gives you a bit of an example about what we need to go through and show in the real world what is actually disclosed. Okay. So again, just a little bit extra based upon our geographical information that you have. Was it there from AB Foods? So they've split it out: UK, Europe, Africa, Americas, Asia Pacific. They've gone through there and shown the revenue and the assets. However, they've gone through a little bit further and given some voluntary disclosure to go through there and give more useful information to the users of the accounts. Okay, so the key ones that they must disclose are revenue and the assets. The other ones are just there as their own potential disclosure that they've decided to make. So that's it. Okay, that's IFRS 8 in a nutshell. It's quite a considerable standard with regards to disclosure. A lot of disclosure is required, but there aren't a huge amount of rules that we need to consider. We just need to think about who the chief operating decision maker is, because they regularly review the results. We need to think about why we have the disclosure standard. We need to think about what must be disclosed with regards to the 10% and the 75% test. We need to think about grouping segments together that are similar economically. And then we need to think about what is then disclosed within those financial statements. Okay, so separating out the revenues, the assets, the liabilities, the capital expenditure, the depreciation, the amortization, the non-cash expenditure, and then also looking at it as well, if you like, from a geographical segments perspective, thinking about the revenue and the assets. If you can go through and understand all of that, if there's any IFRS 8 questions within any exam, you'll have no problems whatsoever. Other than that, I'll see you all within the next session. Take care.